Welcome back to Squawk Box. The tech sector has been leading the recent rally in stocks. The NASDAQ now closing at another record yesterday, its best one-day gain since mid-May, driven higher by Apple, Amazon, Microsoft, and Alphabet. And the NASDAQ 100 has gained 21% so far this year. Joining us right now is Tom Ford. He is D.A. Davidson Managing Director and Senior Research Analyst. And the question on so many people's mind at this point is, do you still buy these stocks at these levels, Tom?
The answer actually is absolutely. So if you think about COVID-19, we're in the middle or early stages of a multi-year event. Multi-year event where during COVID-19, we're a lot more digital. And then after COVID-19, we're going to be more digital than we were beforehand. So yes, a lot of the stocks have had an amazing run. My average covered company's up north of 40%, but I do think there's opportunity in the tech space.
Your audio is coming in and out a little bit, living in this COVID-19 tech virtual world that we're trying to conduct business in. When you think about Apple, for example, versus an Amazon, if you could only buy one of these tech stocks still at these prices, where do you land?
You have to go with Amazon. E-commerce is really doing amazingly well. COVID-19 has ejected Amazon with growth hormone. So I think that you're seeing sustained growth in e-commerce. The rate of e-commerce spend is materially higher than it was before, and the mix of spend devoted to e-commerce will be a lot higher in the future than it was in the past. So I'd vote for Amazon over Apple.
Let's bring Melissa in. I know she's got a question.
Yeah, Tom, I wanted to get to you on Amazon. I mean, Amazon crossed 3,000 for the first time in yesterday's session, and this ahead of earnings later this month. Your price target at Amazon is $26.25, and yet you still say Amazon is the one with more room to go. What brings it even higher, and why wouldn't you raise your price target?
Great point, and I do think I need to review my price target for that reason, to the extent the shares are trading higher. But if you think of Amazon, a lot of the strength in Amazon is in the retail space, which is their lower margin business. So at some point, cloud usage is going to have to drive future cloud spending, and that'll drive margin. But I do think for Amazon, this has caused a lot of sales growth at the e-commerce level, which has reinvigorated the business. And they've shown over time that they're able to adjust their margin structure to better leverage their sales.
So in terms of the future growth in Amazon stock, Tom, I mean, we need the margins from AWS to kick in. But the way Amazon has really benefited during this pandemic is from the lower margin sales in e-commerce. Is that correct? So would you say this rally is really built on something firm?
Yep. It is correct that the majority of the incremental growth has been in the lower margin business for Amazon. But if you look at cloud usage, I think that's a good predictor for future sales and margin opportunity for Amazon. And Amazon has shown an ability that when there's incremental growth, they're able to incrementally invest in the business. Their advertising business, for example, is doing very well. One of the reasons it's doing well is they advertise against products on their e-commerce platform. So I do think that while the growth has been in the lower margin, there's a lot of opportunity in the advertising, in the cloud, near term and longer term.